Good morning and welcome to BloombergQuint. I'm Niraj Shah. This is the trade setup for the morning. The US Federal Reserve and the US government has promised something unprecedented. The US Fed, at least, is willing to buy unlimited amounts of treasury bonds and mortgage-backed securities as it tries to ebb the flow from equity markets. And that did provide some relief on the Asian screen. The relief on Wall Street, of course, fizzled out, but such are the times that one needs to work with a lot of caution. Now, this is what I'm trying to say. What has happened over the last 24 hours, the most important things. So the Fed announced unlimited buying of treasury bonds and mortgage-backed securities. This is something that Fed has not done in its history of whatever number of years, over 100 years. UK has gone into a full lockdown starting midnight yesterday, and India will see a stoppage on all air travel from midnight today. So these are a few things that countries across the world are doing to combat the virus. But as I said, from a market's perspective, the most important thing was Fed did. Now, the curious thing is the impact that it is having. Now, keep in mind, these are unusual times because we don't normally see this happening, that volatility and stocks coming off at the same time. Typically, when VIX comes off, markets tend to behave in a slightly better fashion. It's a chicken and egg situation. But what we've been seeing the last few days is this, that volatility ebbs and stocks are also coming off. However, the Fed had other plans, and that has led to some bit of green on the screen in the sessions today. So the Dow futures are trading with some green, about 592 odd points, 3%. After correcting 3% overnight, 3% up in trade this morning. S&P 500 futures too, up about 3.3%. And that is leading to a bit of a spring bounce effect in the rest of the Asian screen as well. So if you look at Shanghai, 1.74% in the green, Hang Seng about 3.86. Nikkei is on another planet altogether, 6.4%. Of an upside. Remember, markets like Nikkei and Kospi actually did reasonably okay yesterday, just that we were the big stark underperformers in the session yesterday, and we too are probably showing signs of bouncing back. The SGX Nifty, well, a 5% uptick is what the SGX Nifty is promising. Let's wait and watch if this is how the Indian markets eventually turn up. Now, just before I get to the trade setup for our markets individually, and a couple of points I want to highlight there, a couple of other moves that are happening within the Indian markets and the regulations as well. So firstly, SEBI's relaxed norms for companies which want to issue instruments like NCDs, commercial papers, and other instruments, which can be issued using the September quarter financials. Remember, viewers, the changes, and this is only extended till May 31st, but the change is that the 6-month preceding numbers need to be given. Now, up till March 31st, it was fine. You could probably give the September numbers, but what about the times ahead? And because it's difficult to assess what the numbers would have looked like, what SEBI's done is allow companies to issue these instruments until May 31st using the September quarter financials, which is actually good because it gives the companies the breathing space. A lot of companies will need to issue these instruments in order to keep the liquidity lifelines going, and now there's a bit of a relaxed amount there. NSE has done something as well. Across various equity indices, the rebalancing that was due to occur on March 27 has been deferred now, and we'll talk about this implications later on the various shows on BloombergQuint, but this is the other important thing that has happened. Now, what could all of this mean for the trade? Well, we'll have a bounce today, but I personally believe there are mixed possibilities of the bounce sustaining. India is underperforming. We haven't quite seen a spike in numbers. Everybody's waiting for that, and you would presume, I think we were talking in the morning within the BloombergQuint editorial team, that it's almost like you trading each day as it comes, and therefore, even if there's a bounce today led by the world markets and what the US futures are doing, you don't quite know if it will sustain. There are enough cases to presume that it may not sustain as well because we've gone into full lockdown mode from today. So lots of things moving around. The start promises to be in the green. Let's wait and watch what happens. I doubt that the flows will really return. And frankly, if you look at what flows are looking like, India is set for the biggest foreign inflow from stocks since 2000. These are moves that we haven't seen in decades. Look at this outflow that we've seen month to date, and therefore the year-to-date numbers also don't look all that pretty. And just date it back, you haven't seen such a long bar in the last 20 years, which speaks about the volumes of the kind of pain that we are in, primarily because foreigners are pulling out money, and there is not enough buying that is happening out here. Yes, there is buying because somebody's selling, somebody's buying, but the pace of buying and there is absence of serious cash market buying that is happening in the Indian bourses. So that's the other bit that you got to monitor. What about specific stocks that you should keep in mind out? Now, Jubilant FoodWorks is amongst the QSRs which has said that the dine-in facility now stands suspended. They've still kept the order-in facility going, but the dine-in is suspended. 12.5% down in trade in Monday. Remember, this stock actually went up about 12-13% in Friday's session. It's corrected 12% yesterday. Let's wait and watch what happens today. Is there more pain in store? I would reckon there's more pain in store for the aviation companies, because stocks like InterGlobe Aviation and SpiceJet would feel the brunt of all air travel suspended now, starting midnight tonight until March 31st, I presume, at least. So this should be some pain for these companies, and one would reckon that maybe there could be some more downsides. And a clutch of companies have done this. I've just chosen three on a random basis, three reasonably large, mid-sized companies which have ordered plant shutdowns across all the geographies, or some of the geographies where the plants are present. I think India Cements has said all geographies in Tamil Nadu plant shutdowns are there in place till March 31st. So maybe some pain out there as well. But I think amidst all of this pain, there is one thing that people should keep in mind, and I think I would like to quote what, well, maybe Ramdev said yesterday in the interview, and I urge you to log in and try and read what Ramdev, see what Ramdev Agrawal mentioned yesterday, or what Sanjeev Prasad is saying in the strategy note. He's saying that study of flows and past crisis offers little guide to how to invest. The focus, if you want to invest, should only be on the gap between the intrinsic value, or the value, and the price of stocks. And one would presume that the price of stocks is much lower than the current value or normalized value that these stocks are at. And most people are going by that benchmark right now. So if you are thinking of wanting to invest, maybe get down to figuring out the value in your eyes of this business, and then try and figure out if the price is lucrative enough. Thanks so much for tuning in to this trade setup for the day. Have a great day ahead.
According to a recent report, women today contribute nearly 74% of real estate buying decisions. This includes 32% of single women buyers